Hey, this is Mitch Stephen with TaxFreeFuture.com. I'm here with Jennifer Ferloon and Tim Berry, the attorney behind TaxFreeFuture.com. And Jennifer, like what are you laughing at, Tim?
I'm just laughing. You announced I'm the attorney behind Tax Free Future, but I'm not looking so good. So I don't know if I want to inspire confidence in everyone.
Hey, this is the thing. We just got lucky that he's on here because he's usually tending with his clients and helping people get in or out of situations. And so thank goodness he's on here because there's been changes. Now, Jennifer is the administrator and the salesperson that we have here that helps keep all the prospects informed and moving forward when they decide to go forward. How you doing, Jennifer?
Hey, great, Mitch. Thank you for doing this, Tim. I know that we kind of did a sneak attack on you, so I appreciate your time.
No problem.
As you can see, Tim was on the beach and we're interrupting his let's get right to it. First of all, the reason why we wanted to start this is because Jennifer recognized that this is a perfect time to go ahead and deal with that to-do list. And one of those things we know on a lot of people's to-do list is to get an IRA or a 401k and get it set up. People don't look forward to it. You know, it costs a little bit of money and it takes some time. But look, we're in a pandemic right now. So people got time, right?
And this is what's great is use this time wisely. So by the time the pandemic is over, the dust has settled on, getting your accounts set up. Your accounts are ready to go. Your checkbook is ready to go. And, we have lots of investment opportunities for you. This is going to be a time when millionaires are made. I've been saying it since day one. Savvy investors, even if you're a brand new investor, this is a time when you are setting yourself up to be a millionaire.
Yes. So there have been some changes in the tax code. So I wanted to get Tim on so that he, we could get it right from the horse's mouth and someone qualified to speak on it. So Tim, can you tell us an overview of the changes? And if anybody wants to get real deep, they can get a consult or something. But can you give us an overview without boring us to death with too much tax stuff? Tell us what we need to know.
That hurt, Mitch. Me? Boring? How can that possibly happen? How can that possibly happen? Oh, look, and Jen's already going to sleep there. Here's the thing. Keep in mind the figure $100,000, because that's what all these tax code changes apply to, is $100,000. And there's some really cool stuff. First off, tax code says you can take $100,000 out of your retirement plan and you don't have to pay a 10% early withdrawal penalty if you're under 59 and a half. Right there, you've saved $10,000 bucks. But here's another cool little feature of this. Another cool feature says if you're working for the man, if you're working for IBM, whoever, Microsoft, whatever, and you want to take money out of your retirement plan with them and put it in your own retirement plan, your own self-directed 401k or self-directed IRA, you're allowed to do that with these new changes. So now you can call up your HR department and say, hey, HR department, I don't like the way you're managing my retirement money. I want to manage it better. Fork over $100,000 bucks. And so you can get that amount. So that's a cool benefit.
It's called a rollover, right? Because it's a tax-free event. They're just going to roll it from one tax-free account to your own self-directed taxfreefuture.com account where you control where you want to invest this money.
Absolutely correct. And you don't have to pay taxes on it. So that's way cool. If I was from Boston to say that's wicked cool. Well, that's a really neat feature. Another great thing is, let's say you do want to take money out of your retirement plan and you want to get a shiny red Ferrari on it. Okay, cool. You can take out $100,000. You don't have to pay that early withdrawal penalty if you're under 59 and a half, and you can drag out the taxes over the next 3 years. So you get tax deferral going with those distributions. Other thing is if you got money inside your current self-directed 401k, you can borrow $100,000 out of that bad boy, not make any payments for the next year, and the 100,000 is double what it used to be. It used to be 50,000. So there's a lot of cool changes that have been nothing but beneficial for people with self-directed retirement plans. And as Jen was saying earlier, now is the time to do it because these great benefits are only a relatively short time period. They're not going to last forever. Whenever our wonderful Congress meets, they're probably going to mess things up again. So now is the time.
So we got some emergency measures. So we want you to get a consult with Jennifer. Let's get the basics in line. And then you're going to deal very specifically with Tim about your personal situation, exactly what you want to do, whether you want to roll over from your company's retirement plan into your own self-directed plan, or you just want to take some money out. We're going to get it right from the horse's mouth. We'll get it from Tim Berry, so that it's very personal, because everybody's situation seems to be different or unique. And it amazes me the things people can come up with that they want to do that I've never thought of in my life. And you got to defer to Tim, because, you know, that's what he's been doing for the last over 2 decades. Okay. For 2 decades, Tim Berry has been dealing with tax deferred or tax-free retirement plans and the laws and the pros and the cons that go with all of it. There's always a plus and a minus. You have to be careful. You want to stay within the guidelines and the rules so that you can maximize and not get yourself into any penalty situation. So Jennifer's available, and just go to taxfreefuture.com. You go there, you fill out the little micro form, name, address, email. We promise not to beat you up with a bunch of useless stuff every day. We just want enough information. And then we're going to give you 37 video vignettes that you can watch and see all these amazing things that you can do with some of these accounts. And there's different kinds of accounts, and that's what you'll get counseled on as well. There's Roth IRAs, there's traditional IRAs, there's solo 401ks. And one of the things you talk to Tim about is what's right for you. How old are you? How much money do you make? How many kids you got to send to college? There's a whole bunch of stuff that we need to discuss so that you can get what's right for you. So Tim, tell us more about the changes.
Man, those are the main things, was the $100,000 and then the $100,000 loan. And here's the cool thing too. If you think of the distribution with being able to drag out the payments over 3 years, and you match that with the $100,000 loan, that's effectively a $200,000 loan you can get out of your retirement plan if you have the money in there. So I have someone right now where she's going to take her money out of the retirement plan. She's investing in real estate, getting the depreciation deductions on that money she's taken out of the retirement plan during that time frame, and then she's going to put it back in. So she's getting the best of both worlds. She's able to use her retirement plan with tax-free future, gain access to that money, generate tax deductions for future years, and then put that money back inside the tax-free manner, and then with asset protection. I saw a hand over there, Mitch.
Yeah, so I want to be clear. When you said you take it out, you don't have to pay. What's the tax ramification when I take it out? Am I paying my taxes over 3 years, or I just got to put say like I take out 100 grand, the max? Do I pay? You're saying I have to pay the tax, add that to my income, but only over 3 years? Or are you saying I just have to pay it back to the plan within 3 years?
Well, let me throw some numbers into it. Let's say I take out the $100,000 distribution. I take out the $100,000 loan. I got $200,000 burning a hole in my pocket. Okay, now how much do I have to pay in taxes on that? Year one, I pay taxes on 1/3 of $100,000, or $33,000. But you know what? I go out and I use that $200,000, I leverage it, and I buy some real estate. Hopefully my depreciation deductions are going to offset that $33,000. And now let's say I do this for 3 years. I put the money back in. Then I just file an amended return for those previous years, 1, 2, and 3, and I get that money back. So this is just a no-brainer. There's just so many neat things we can do.
So do y'all see how much smarter that plan is than buying the shiny red Ferrari? So if your money isn't if your assets are not making your money, they're not assets, they're liabilities.
Well, and let's talk about in the present environment today too. You get all these bailouts, all these people running around with their head cut off because they can't make money, et cetera, so on and so forth. if they just would have done something like this in the previous years, they could be sitting on their butt, kind of like me, looking like hell, kind of like me, and so having money just coming in, kind of like me. So, I mean, if they just would have done stuff like this and structured themselves beforehand, they wouldn't have to give a damn about this disaster. Excuse my language, everyone. Worry about this disaster and their income drying up, because they planned ahead using the retirement plan money, setting up their tax-free future, and getting all this money coming in and getting tax deductions for having this money coming in too. It's a no-brainer.
Yeah, so I want to go back to the example you used. You get 100,000 out that you have to pay the taxes on a third a year for the next 3 years, unless you put it back within the 3 years, and then you can file an amended return and get your taxes back. And then you take an additional 100,000 that you borrow. How do you have to pay that money back? The 100,000 that you borrow, how do you got to pay that back?
You're going to pay that back within a 5-year period, but there's no payments for the first year. So go out, buy those rental properties, now use the cash flow from the rental properties to pay back this $100,000 loan. That's all.
And what interest rate do you have to pay yourself?
It needs to be 2.5% over prime. But you mentioned it right there, Mitch. Who are you paying that interest back to? Yourself. So it's a little bit higher than you're expecting, but you're paying it back to yourself. Life is good. What's wrong with that?
That's amazing. So this is why we wanted to put this out. And Jennifer, I want to take my hat off to you. Look at that. I used to have a 4-head. Now I have a 9-head, trying to make sure. That's why I wear it. I want to take my hat off to you, though, because it was great that you wanted to have this little get together with Tim, because it is a perfect time. Setting these things up, you got to get your corporation, you got to do a few things. It'll take a month and a half, okay? This is a perfect time while we're sitting on our duffs with not a whole lot to do, get something accomplished. While this pandemic has wreaked havoc and is causing some problems, we can use it for good and get some things dusted and cleaned up, and off the shelf that we've been trying and waiting and saying we're going to do forever. And it's just a really good point you made. And I really had no idea how significant the changes were until just now. So I'm just glad you brought it to my attention. So if you guys want to get a consult and get rolling, please go to taxfreefuture.com. There's a form there, right, Jennifer?
There's a consult link. So you'll just click on the consult link. You'll fill out the your information. You're going to pick a time. Keep in mind that the times are Central Time. So if you're on the East Coast or the West Coast, just, I think that you can maybe adjust that. But, you and I will have a talk and we'll get you set up. And then if you're ready to pull that trigger, then I hook you up with Tim, and then we're good to go.
Hey, I want to mention, tax-free future, it's about $1,500 to get rolling. But then after that, the annual fees are plus or minus $175 a year, okay? And there's we don't nickel dime you to death with a fee for a payoff, a fee for, a lot of places that are free, by the end of the year, they're not free at all. They have even a value charge. Whatever your IRA is worth, there's a percentage charge for whatever its value is. And the more successful you get, the bigger that fee gets. And so I don't want you to be fooled by low or no upfront fee offers, because they're getting you tremendously on the back end. I had four accounts, and I was paying $2,000 to $3,000 on every account. I figured it out. I was like $11,000 I paid to have my 4 retirement accounts by the time they got done with me. And I got into them because they were free. Well, they're not free, and this billing goes on forever. Every year I would get this $9,000, $10,000 bill, and it keeps getting bigger because, fortunately, thank God, knock on wood, I was being successful at building my accounts. So it was like a bittersweet pill that I had to take. When you sign up with taxfreefuture.com, you pay $175 annually, unless it's like 401k, maybe it's $200 or $225. But what I'm saying is, it's a flat fee, and it doesn't keep increasing and increasing till you don't even understand why you did it. So,
Mitch, can we talk about the most important benefit? Like, those are great and they are important, but the most important benefit that we offer that nobody else on this planet offers is you get Tim. So we have an actual tax attorney.
I didn't want to make Tim's head big, but that is a good.
No, we do. Tim works. Okay, so we keep Tim busy. I feel like poor Tim. I feel like if he ever meets me in person, he's gonna strangle me. Like, can you not understand these things? I'm bombarding him. But you know what? What an amazing benefit that is to get a tax attorney on your side in your court, and that's part of the benefit. You're not going to get that with any other plan. They're going to refer you to a tax attorney, and he's about $175 an hour at least.
That's
I've
cheap.
called.
That's cheap. Just so you know, I called Tim, and I forget what do we pay an hour to get a tax planning strategy with you? I think it was like $3.50 an hour. Am I right? What was it?
Yeah, at least.
$3.50 an hour at least. So, but was I complaining about that? Because by the time we ended that, I don't know, it was 2 or 3 hours that we mapped out my entire life and 8 companies and everything else. The bill was stupid compared to what I don't pay in taxes anymore. And they were relatively simple adjustments. It's just, you don't know what you don't know. So if you think you're paying too much taxes, get a consult with Tim and just get your stuff out on the table over there and start doing what ifs. What if you did this? What if that? And the guy's brilliant because, like I said, over 2 decades of being right in the middle of this. This is all he does. That and
Mitch, you keep on saying 2 decades. I think I'm only 29. So you're saying that I started this whenever I was 9 years old?
no, you're not going to get away with that.
That's how brilliant you are. How absolutely brilliant you are. Like the Doogie Howser of the attorney world.
Yeah,
No, and then guys, let's wipe out the false humility. That is a big feature of being able to deal with somebody who knows what they're talking about with these things. Because I'll tell you right now, there's some places that advertise they're run by a law firm, blah, 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 blah. But those law firms are those people who say they give, who run those things, they don't give advice or they don't give good advice. I've got a ton of people who come off the internet, say, hey, Tim, I set up with someone else and this is the situation. And I think, good gosh, how did that happen? And I said, didn't you ask your people for advice? And they say, oh, they don't give advice. They'll set you up. They don't give you ongoing advice. I think that's madness. So we give ongoing advice. We're going to show you how to do this right.
I can testify. Yeah. I got told that I couldn't do this and I couldn't do that and everything. And Tim goes, you can do it. You just have to do it like this. And I go, oh, well, how come they didn't tell me that? And they said, they don't want to go into it as deep as I've been into it in my life. I said, I can tell you the case study right now. So Tim's telling me that the case studies, the rulings that have been passed down, says, look, it's already been proven you can do it. You just have to do it like XYZ instead of ZYX. I said, okay, I can do that. So we flip it, and we did it. So
and I literally had a consult yesterday and he was saying, well, I was told I couldn't do this and I was told I couldn't do that. And I said, who told you that? That's crazy. And he said, well, they weren't savvy in real estate. Then why are they giving you any advice at all? And why did you even take that advice? And so, again, why it's worth the money, because pay the money now, because it's going to cost you later if you don't.
Yeah, don't trip over the pennies.
So true.
Okay, Jennifer, is there anything I know what we need to cover. Now, if some of y'all want to get in control of your own money, you don't want the yahoos over there in Wall Street investing you in the stock market or whatever. You want to take control. I mean, I borrow money from how I got into this taxfreefuture.com in the first place was because so many people that I knew wanted to loan me money, but most of their wealth was tied up in their retirement plans. I said, you can roll this over to self-direction. You can get self-directed accounts. And they said, and so many people said, yeah, I want to do it, but I don't know how to do it. That's when I went and found Tim, which he wasn't very hard to find, because if you talk to people in the circles that I run in, which is the real estate investment circles, you start to learn pretty quick who the best in the nation is on certain things. And his name just kept coming up for tax deferred accounts as an attorney. So I called him and I just was sending people his way. They're getting their accounts so that they could continue being a doctor, continue being a lawyer, continue being retired, but loan me the money and make, a steady Eddie 10% rate of return backed by very valuable real estate. So I have a long track record. I have like $24 million of private people's money, not a whole lot of people. It's like 34, 35 people that I've been taking care of for over 2 decades, some of them, you know what I mean? Most of them over 1 decade for sure. They don't stay with me because their checks don't get sent. But I mean, I send checks like crazy. But I borrow the money to buy real estate. I give the people a first lien. And if I ever didn't pay them, they would get my real estate. I don't loan over 65% of what I can sell or finance my properties for. And that's just the maximum. I average loaning 58%. So if it's a $100,000 property that I want to buy, I average borrowing 58,000, and I give my private lender, one guy, whoever that person is, a lady, I give them a first lien. And if I ever didn't pay them, then they get my property. I've seen a lot of people's portfolios drop down to almost nothing. I don't know how little houses in San Antonio, Texas are going to end up being worth nothing. I'll say this, if those little bread and butter houses end up being worth nothing in San Antonio, Texas, then your money wasn't any good anyways. It won't matter. We're picking up guns and we're going someplace. So if you want to discuss rolling over your money so you can have some control with it, with a real asset backing your money, then tell Jennifer that that's part of your contemplation. And then you and I will have a personal consult after you finish with Tim, and we'll see if that's what you want to do. Number one, though, Jennifer, right? There's never any pressures in this deal. There's no pressure.
Nope. I mean, there's so many ways you can leverage your money. So many. It's really personal preference and what you feel comfortable with. Where's your safe zone? But know what your options are.
I think we got it covered, and I think we're burning up Tim's time on the beach over there. So
must be nice.
Tim, thank you so much for jumping
This
on
is what we all strive right here. Do business on the beach.
Thank you, guys.
All right. You can go to taxfreefuture.com, click on the link for a free consult, and then Jennifer will find out if you want to have a consult with me about being a passive investor and just getting a check in your mailbox and not having to worry about rehabs or flipping. Yeah. And then, if you want to do your flips and stuff, we'll talk about that too. But I'm really there for people who just say, I'm retired. I don't want to rehab houses. I don't want to do it. I just want to take my money and I want to make 10% rate of return, and I need some decent collateral, and I'll show you what I got going on. If you like it, we'll do it. If you don't like it, we won't do it. All right. Stephen with Tax Free Future. Jennifer, thank you so much for being on.
Thank you, Tim. Thank you, Mitch. Thank
you, guys.
And if you're listening to this, call me.
All right. We're out of here. Thank you very much.
Bye.
Thanks, guys. See y'all.